This episode of the What the FinTech podcast is sponsored by Visa Direct.
Hello, and welcome to a new episode of What the FinTech, a podcast from FinTech Futures and Banking Technology magazine. I'm Heather Sugg, the North American correspondent for FinTech Futures, and your host for this podcast, and I am joined by Justin Zhao, Head of Global Partnerships and Sales for Visa Direct. Justin, welcome.
Thank you so much, Heather. I'm so excited to be here with you.
And we are as well. We've got an action-packed episode ahead of us. We are going to get all into your stablecoin pilot program. Before we start and get into the details of that, which is the talk of the town right now at Money 2020, where we are, I wanted to just start from the beginning. So if you could take a second and just tell us a little bit about yourself.
Yeah, absolutely, Heather. I appreciate it. And I'm so excited to be here. I think, to your point, what we're talking about is so relevant to all the conversations I've been having with clients and customers and prospects in the past, 24 hours. So absolutely, a little bit about me. I've been with Visa for about 7 years now, early in the Visa Direct journey. Right now, I lead our sales and partnerships team from a global perspective, as well as from North America. And obviously, Visa Direct is Visa's money movement network, which I know we'll double click into in a bit, and just super excited to be here.
Perfect. All right, let's do that on Visa Direct. So tell us a little bit about the content of Visa Direct, what you're doing, what the role is, and how they're involved in money movement.
No, absolutely. I think when people think about Visa, they think about, this is always my joke. My mom has no idea what I do. She thinks I work at a credit and debit card company, which is absolutely true. But Visa Direct is really everything outside of that core consumer payments flow. So me tapping a card at 7-Eleven to pay for a Coke, that money moving from my account to the merchant account, that consumer to business payment is the core Visa business. Visa Direct focuses on all of the flows that sit outside of that. So that would be things like business to consumer flows. So something like an insurance company paying out a claim, something like a P2P flow. So if I wanted to pay you, Heather, on Venmo or Cash App, or an international P2P flow, let's say if you're remitting money back to the Philippines, for example. So business-initiated flows, business-to-consumer flows, business-to-business flows, including sort of the big B to big B flows, the big B to small b flows, and all of the account-to-account, me-to-me flows, and P2P flows, all of those fall under Visa Direct. And Visa Direct is a money movement network where we can basically move funds to 11 billion endpoints, whether that's a card, a bank account, or a wallet. And the way I think that makes this become real to folks is talking about some of the use cases and clients that we support from a Visa Direct perspective. And so early adopters included Lyft and Uber as they were paying their drivers. So Lyft and Uber drivers get paid once a week today, but they both have enabled a function called Express Pay or Instant Pay, where all the funds they've earned, the drivers have earned, they can get instantly deposited to their account in real time for a very nominal fee. And all of that runs on Visa Direct. Because if you think about it, today in the US, a real-time ACH or a normal ACH payment, even if you catch a 4-hour settlement window, if you're standing at the gas pump and you need money as a Lyft or Uber driver, you need that instantly. And Visa Direct is fully ubiquitous and real-time here in the US. And we can also move money internationally as well. So that same experience of receiving that money in real time on Venmo or on Uber or on eBay or Airbnb as a seller or host, we can also move that money internationally. And that can go directly to a card, directly to a bank account, or even to a digital wallet. And so we have 80 digital wallets in over 50 countries. So in China, for example, Alipay and WeChat Pay, we can send money directly to those digital wallets as well, all from a fiat perspective. So that in sort of 3 minutes is Visa Direct in a nutshell.
It's a massive infrastructure you have there. So let's talk about this. As you're moving it from a fiat perspective, what's the infrastructure you have? How is the money movement working today? And what are the challenges with how that's lined up?
No, it's a great question. We talk about the pain points in both domestic and international money movement every day. I think if you're a business or a bank or a fintech and you move money, everyone moves money in and out of a platform fundamentally, and you have challenges. I think just some of the challenges that we see today are, especially as you look at international money movement, things are slow. If you're sending money to Europe, for example, and you're using the traditional bank correspondent rails and SWIFT, you're going to be sending money, it will disappear into the ecosystem. And an indeterminate amount of euros is going to pop out on the other side, and you don't know when. Not only is that opaque and slow and not transparent, costs are high, and not just the cost of the individual transaction, but also the cost of maintaining partners and an ecosystem. And if you're a multi-regional business, and let's say you're based here in the US and you want to expand to 5 to 10 different countries, managing payments and money movement in those countries, it becomes an incrementally higher sort of what I think of as a capital C cost of multiple partners and banks and local connections. So I think the capital C cost, in addition to the fact that for consumers and businesses, it's very opaque and it's slow and the user experience is poor. I think all of those are just some areas where I think there's a lot of improvement that can be made here, especially in the US.
And you're solving for the capital C cost. So let's dive into that. I want to hear more about it. Tell me about Visa's new stablecoin prefunding pilot. Tell us how it works.
Absolutely. And so one pain point that I didn't exactly touch on that I think is going to fundamentally change especially globally, but certainly here in the US in the next few years, is the way that the prefunding and treasury management for cross-border payments works here today in the US. At a very simple level, today, generally, if you want to be able to send cross-border payments, you're going to park a bunch of capital with your partner. Let's say you've got $1 million in flow. Either the night before or the morning of, you're going to park $1 million in that bank account, give or take some of a little bit of buffer if you go over. And as you send those payments, that $1 million slowly gets drawn down upon. And if you imagine today in the US that, let's say it's a long weekend, you're going to have to take that $1 million and multiply that by 3 because the US banking infrastructure today doesn't work on non-banking hours, so weekends and holidays. And that 1 million that you park with some buffer rapidly becomes 3 plus. And if you run out and it's a weekend, your payments don't move. And that's a massive, massive issue here, not only in the US, but also globally. And what we're doing with our stablecoin pilot is allowing you to fund those transactions in stablecoins. And that is not going to be tied to the banking hours here in the US. It will be 24/7, 365. And really what that allows you to do is create a tremendous amount of flexibility. And you, as a client, will be able to manage and put your working capital to work for you instead of parking it in a bank account for days on end and having the insecurity of, well, what if I run out? And you're faced with 2 options. Pre-fund more into that account or have your transaction stop if it's a heavy weekend. And so our stablecoin pilot is going to really solve a lot of those working capital and treasury management challenges today.
It is. And that's the huge deal about what you're talking about, because we talk about faster payments. We've been talking about faster payments for years, and it was always about access to money. And now you're freeing up what people were having to put aside for days on end, compounding on itself. I mean, what is the response that you've had to this so far?
I'm sure you're having the same conversations. I mean, I feel like, I was going to say every other, but it really is almost every conversation I've had. And, it's early, we're only 24 hours in, but all the conversations I'm having are about, I would say, one of 2 things. One, agentic. Obviously, agentic is very hot right now. But honestly, stablecoin and the different use cases and how all the different companies are thinking about stablecoins in the sort of full payments ecosystem, those are the conversations I've been having. And as we talk about what we're offering today, the interest has been immense from all different types of players in the ecosystem because they all have the same experience with money movement and with payments, especially on the international side in the US. And I think what we're offering is really novel in the market. And so tons of great conversations and great traction.
Tell me a little bit more, as you're having these conversations and you're in beta, entering into betas, what are some of the use cases? How are institutions and businesses using this to manage their treasury?
Totally. It's a great question because I think as you think about the ecosystem, it really, no company and no industry has the same set of needs. They think about things very differently. Fintechs, corporates and enterprise and banks are all thinking about this in very different ways, but their fundamental needs and their pain points are all the same. And I think they're approaching, I would say, stablecoin generally very differently, right? Banks obviously trying to understand how they fit into the ecosystem. Is this an opportunity? Is it a threat? How do I get in front of this? I would say a lot of corporates don't think about money movement. It's not really a part of their core business. Oftentimes it's a cost center, but they're hearing all about stablecoin. It's clearly the new innovative sort of kid on the block, and they're trying to understand how that impacts their business, how they should even be thinking about it. Whereas fintech is all over, I would say, stablecoin, and anything that they can do stablecoin, they're looking to integrate it into our business. And so really focusing the conversation, I think, on this very tangible early use case that frees up capital is something that I think is very intuitive to all of the players that we're talking about. Working capital, liquidity, interest rates, and how fintechs enterprises interact with their banks, and how banks think about managing their treasury. I think it's just very tangible, and we're seeing just a ton of traction. And I think money movement specifically, I think, is obviously where I talk every day with clients about. And prefunding, it's been resonating. And so we're seeing tons of traction. And it's a little bit different depending on the conversation that we're having and the type of client and their maturity, but it's all been super, super positive.
Okay, so I'd love to double down on the audiences you're talking about here. The fintechs, I agree, we're hearing the same. They are all in. They're excited about what they can do with stablecoin. They're excited to build into this ecosystem. So you're getting a lot of volume coming your way. How can they get involved in your beta? What are the steps for them, for fintech specifically?
Yeah, totally. I'd love to hear about some of the conversations you may be having too, and like what you're hearing in the market. I mean, I talk to maybe 2 or 3 new stablecoin companies every day, and every conversation is about what can we do, and how can we do it. And I think the what can we do in the universe of use cases is so big in fintech. But I think on the how can we do it, now that we're offering this settlement option, I think what we're also seeing as well, as we're hearing some of the pain points and what people are looking to do, is that sort of the core Visa Direct fiat money movement infrastructure actually solves a lot of those early use cases. So I'm talking to a lot of clients of all different sizes in all industries about their pain points with moving money internationally generally. And so, it's slow, it's opaque, I have challenges with my bank and with Swift. I mean, everyone wants to talk about cost, but that's a different story. But what I would say is, as we hear about, I've talked to 4 different partners and I've got to talk to a 5th partner about stablecoin. But my core challenges are, I want to be able to move money, and I want a single partner that can do it. I want transparency, and increasingly, on consumer, I would say it's borderline table stakes. I want real-time money movement. On business, I think we're getting there. And I think a lot of they're jumping immediately to stablecoin, which makes sense. I mean, it's a very cool and hot topic right now. But I think when you look at sort of the core fiat rails, there's a lot of improvement I think that Visa Direct has today that we can deliver on our core fiat rails that people are thinking about solving with stablecoin. So I'll give you some examples. I have suppliers I need to pay out in Vietnam and the Philippines, or I run a consumer-facing business, whether it's a 2-sided marketplace, or I'm moving into the remittance business. I need to be able to move money to a consumer or a small business, oftentimes businesses of 1 or under 10 if I'm an e-com platform. And I need an easy and scalable way to do that into the emerging world. And they immediately think, stablecoin. And that is absolutely, I think, going to be a medium and long-term solution for a lot of these players. But when I think about sort of our core infrastructure on Visa Direct today, we can already move money to 11 billion endpoints globally. And so I'm like, if you want to reach Vietnam and the Philippines, for example, I can move money to debit and prepaid cards there. I can move money to pretty much every single bank account there, and also the mobile wallets. And in the Philippines, for example, GCash is their most ubiquitous wallet. I can move money to pretty much everyone in the Philippines on card, account, wallet, via a single integration, single partner on Visa Direct with the fiat rails that are in place today. And they're almost all real time already. And I think just understanding some of the money movement fiat alternatives that already exist today can solve a lot of the problems that I think people are looking directly to stablecoins for today. And obviously, I'm a stablecoin and crypto evangelist and proponent. But I think it's interesting as we talk about some of the very tactical pain points that a lot of these companies are looking to solve, that I think there's already a lot of great options for them today, including Visa Direct. And I think stablecoin as sort of an additional rail, an additional capability, and a value add that I think will slowly work its way through the, I would say, more traditional money movement infrastructure. I think that is maybe a way that I'm trying to guide clients to think about it, because we are bringing stablecoins as a part of sort of our core fiat infrastructure and adding on capabilities slowly. And if they build into Visa Direct, they know that we will be on the forefront of innovation. We invest very heavily in the network, and we're bringing all of those into our core infrastructure. And so they can get the entire fiat infrastructure. And as things come like stablecoin, risk, fraud, value-added services, transaction monitoring, visibility, all of those fiat and stablecoin requirements, we're going to be integrating all of those in the Visa Direct network.
I'm glad you brought that up, because it's not like that stablecoin is the answer to everything today. We don't have the golden answer yet. And with all money movement, we continually add new things, and it's a surplus to what's already there. there are
Totally.
benefits and additions and ways to do things better, but in the right use case. So
Totally.
fintechs also need to recognize that and make sure that they are not solving for things that don't need solved yet, I think.
Exactly. And I think like another part of that, building for things to solve, I think is thinking about how to solve for scale.
Yes.
And this is great because I think there's tons of innovation to go in the infrastructure as it relates to stablecoin. But, companies of scale want one-stop shops. They don't want to have to go to one company for stablecoins in one market, one company for stablecoins on a settlement perspective and an infrastructure perspective, one company for fiat to account, another company to fiat for cards and wallets. And so I think as companies and as fintechs and even banks are looking to solve for a lot of the challenges that stablecoins are going to be offering, it's important to think about the legacy infrastructure and sort of the fiat rails as well, and how do they solve for the universe of money movement as opposed to solving specific use cases. And I think networks, and that's really what Visa Direct is. We're not a direct to consumer platform. We're really the infrastructure and rails on the back. We can support companies of any stage with a full suite of products, fiat, stablecoin, cards, accounts, wallets, FX services, et cetera, in a very modular way. But I think putting myself in a buyer hat on the corporate side, I need partners that can scale with me globally. And I don't want 30. I would rather have 3. And so I think that is something that I'm talking to a lot of companies about as well.
Absolutely. It makes sense. Now, from the banker perspective, I think a lot of banks are challenging themselves and they're trying to decide how progressive they want to be and how much they want to be on the edge of what's happening right now with crypto and with everything with stablecoins. What are you seeing with the bankers you're talking to and what they want to hear from their peers?
Yeah, and I'd love to hear your perspective on the bank side as well. I know you're spending some time with some bankers this weekend. I think for me, I feel like stablecoin is a very interesting, unique innovation in the ecosystem because, and I guess this is like a very overplayed joke, but right, like every banker wants to be first to be fourth or fifth or
Yes.
sixth. For stablecoins though, I feel like there is this interesting groundswell and people are really looking for ways to get involved, and it's on the banking side as well. I would say a very large proportion of our pipeline and conversations are with banks right now, and they're very proactively trying to identify how they can get involved and what they can be doing and really understanding the different use cases that they can integrate. So I've seen, honestly, more interest in stablecoin than I think I have in many of the other sort of innovations over the past, certainly 3 or 4 years as it relates to interest and adoption by the banks. I'm not sure about some of the conversations that you've been having too.
No, I believe that. Safe to say, we've been talking about things and there's been hype around things and the crypto rush that we had 5 years ago, I don't know.
Totally.
But at that point, I think everybody was still very cautious. And
Yeah.
now that we have stablecoin, it makes sense. And they're seeing the use cases and they're seeing the international payments they need. And now we finally have the overly cautious side is giving way to a curiosity and those early betas, and people understand it. Even boards seem to be getting involved.
No, you're totally right. And that's a great example, the early crypto days where no bank would touch digital assets generally with a 10-foot pole. I think you're right. I think we've gone through a full maturity cycle. I think the regulatory environment in the US with the Genius Act has also fundamentally changed the game. And I think it's just the right time and the right place. There's some early right use cases that the banks, I think, feel comfortable with. I mean, on the banking side, I just think, to your point, it's a different world right now, and I think we're going to see some real interesting adoption. I think sitting here a year from now, we'll be having a very different set of conversations.
Very much so. You hit on something I wanted to ask you about specifically, too. Let's talk about the Genius Act. How do you see this impacting the global stablecoin market?
Absolutely. I think stablecoins are inherently global. And I think in the US, we're going to see tons of innovative use cases that honestly, I don't think you or I could even predict right now. There's so much brain power, so much talent moving into the space that they're going to figure out very interesting use cases. But I think today, the fact that stablecoins are much more prevalent globally as a very stable store of value in markets where there's a lot of currency volatility, especially in the emerging world, I think those are going to be very early use cases. And the regulatory environment I think we're seeing globally, you'll see a lot of the, especially putting a US hat lens on and thinking about the use cases that we'll see early in the US for businesses, fintechs, and banks. I think things like moving money to those markets in stablecoins where there's already broad adoption from a consumer perspective and even from a business perspective, I think those are going to be the early use cases that we see, and we'll see flows that are on fiat today in those markets, Argentina, Nigeria, where there's already a lot of adoption, I think those are going to be the early use cases that a lot of these players target. And I think they're already so highly digitized, and their maturity along the curve, I think, is so much more advanced than here in the US. And I think that we're going to see a lot of change in the US specifically, and I'm excited to see what the domestic evolution is. But from an international perspective, I think flows are going to move in the direction of the markets that are already more mature in stablecoin, and that I think will directly correlate to the markets with higher currency volatility.
And that will help the world in general. It'll be very nice to see that and have that next conversation next year about how much that has moved along. So as I wrap up with you, Justin, tell me in the short term, what is next for your stablecoin pilot, and what should we expect to see next from Visa Direct?
No, totally. So stablecoin pilot, obviously a more limited set of clients that we're going to onboard as early movers, but very rapidly into next year looking to expand the stablecoin settlement offering to a much broader set of clients. Visa as a whole is all in on stablecoins. You're going to see a lot more from us. I'm going to be, in a year from now, we're going to have a ton more to talk about, and I'm really excited about what that future looks like. But in terms of the pilot, we're full steam ahead and looking to expand into more general availability very, very soon.
Very exciting. Well, thanks for joining me. It's been a real pleasure, and I've enjoyed having you on the podcast and look forward to talking to you next year.
Likewise. Thank you.
Well, that's all we have time for this week. A big thank you to our host, Heather Sugg, our guest, Justin Zhao, and of course to Visa Direct for sponsoring this episode. As for FinTech Futures, you can find us online at fintechfutures.com, and be sure to follow us on LinkedIn to keep up to date with the latest FinTech news. If you like this podcast, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favourite podcast service to get notified about all our future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. And as always, thank you everyone for your support, and we'll see you soon for another episode of What the FinTech. But until then, goodbye.